And now we move on to our next segment on the table. Over to you, Mohana.
Good evening. Capital Gains Tax, or CGT, as we know, begins today, 1st of March 2024, for the disposal of shares in Malaysian unlisted companies. Now, gains on the disposals made by the companies, trust bodies, cooperative societies and limited liability partnerships, or LLPs, in such unlisted Malaysian companies will be subject to CGT. Now, on the table today, we discuss the introduction of CGT in Malaysia, and bearing in mind that the personal tax filing season is just around the corner, we look at some key changes in the tax filing for the assessment year 2023. In the studio with us today, we welcome back Mr. Harvinder Singh, Council Member of the Chartered Tax Institute of Malaysia. Good to have you back, Mr. Harvinder.
Thank you for having me here, Moana.
Okay, so let's begin with the CGT first. Can you share why the Malaysian government implemented this tax?
Sure. Well, basically, Mohana, this is actually at the behest, you could say, of the European Union, the OECD, the world bodies, because CGT is supposed to be a more equitable system of taxation, allows for a more equitable system of taxation, because you're looking at taxing those parties that have some affordability, you know, in terms of having capital assets, shares, etc. So it will provide some, facilitate, you know, the ability to provide some relief on the low income group in terms of taxes. So that's one of the reasons. And it's not just in Malaysia that it has been implemented. It was also being implemented in Singapore. We always tend to compare what happens in Singapore.
That's right.
And certain variation to this CGT is also implemented in Hong Kong. In Malaysia, of course, it is basically to cover both disposal of foreign capital assets as well as domestic shares, unlisted shares in Malaysian companies. Singapore is only on the disposal of foreign assets, and something along the same lines for Hong Kong as well.
Okay. Now, what is the tax rate applicable for this CGT?
Depending on whether you're talking about the disposal of the domestic shares. So if you talk about, firstly, it's only applicable to companies. It's only applicable to limited liability partnerships, trust bodies and cooperative societies. So I suppose, thankfully, it does not affect our general viewers, the individuals. Individuals are not subject to tax. So if there's a disposal by, let's say, a company in another company's shares, unlisted shares, the rate applicable is basically 10% on the chargeable gain, the gain that is made. But bearing in mind that to arrive at the gain, chargeable gain, you have to look at your acquisition price, which may involve looking at the valuation of shares that were acquired maybe 10 years ago. So to have that kind of data information can be a bit of an issue. Therefore, if the disposal takes place, let's say in April or May of some shares, you know the disposal price, you don't have to go back and look for the information on your acquisition price. You can opt to pay taxes at the rate of 2% on the gross value. If you have all the information, then it's 10% on the net amount. But if you do not have, and this is to facilitate situations where you go back a long time prior when the shares were purchased. So in those cases, it's only 2% on the gross value.
So there is a difference between long-term and short-term?
There is no difference between long-term and short-term. It's 10% all the way for CGT, basically. So if you acquire the shares in April 2024, and you dispose them in May 2025, or you dispose them in May 2030. As it stands right now, the CGT rate is still 10%. But to arrive at your gain, you need to look at the disposal value, disposal, the acquisition price. The information that's required to get to the acquisition price can be quite difficult if you're talking about an acquisition that took place 10 years ago. So just for that purpose, you are given the option to either go on the 10% basis, 10% on your gain, or 2% on the gross. You know how much you're selling it for?
Yeah.
Your gross proceeds, you know how much you're selling it for? Just apply the 2% to that. Yeah.
Okay. Mr. Harinder, how does the disposal report and pay the CGT to the tax authorities? What are the deadlines? Are there specific forms that you need to account for and fill up?
So again, we have to look at it for the domestic disposals. You have to, for every disposal of shares that takes place, you have to report within 60 days right, to the tax authorities. And there is a form, you have to go online, and form ECKM, I think it's called, Cukai Keuntungan Model, that you got to submit, and you got to pay the taxes as well within the 60-day period. And I need to highlight that the tax rate that's applicable for disposals of overseas investments. And overseas investments not confined to just disposal of unlisted shares. It can be listed, company shares, could be a property disposal overseas. That is subject to CGT in Malaysia as well. And the timing of that is dependent on when those funds are remitted into Malaysia. They'll be picked up as part of your income for the corporate tax filing for a company. And therefore, you pay according to the timelines that are there for corporate taxes. And the tax rate applicable would be 24% for a company. So it follows the tax rate that's applicable for the relevant party. So 10% is only for domestic disposals. For overseas disposals, it follows the rate applicable for a company, for an LLP, for a trust body, for a cooperative society. And timing is when you remit the funds back into Malaysia.
So is it possible that the CGT can be imposed on disposal of other capital assets? Now, you mentioned property or artwork or things like that, instead of just the shares of unlisted companies in Malaysia? Or what kind of disposals are actually...
I think at the moment, as I say, it's only confined to disposal of unlisted shares to basically give CGT a bit of a soft landing, I suppose you could say that. But I think the roadmap for CGT would entail widening the scope of CGT to disposal of other assets as well. Like you said, artwork, other, properties or motor vehicles or other assets could also come into the equation.
When can we expect that?
Difficult to say.
Difficult to say.
I think it's probably something that's not going to happen very soon, a little bit further down the track. But because we find that similar treatment is adopted in Singapore as well. It's only on disposal of shares at the moment.
For now,
for Singapore is disposal of investments abroad. But in Malaysia, the idea is to confine it to companies, similar to Singapore as well. So disposal of unlisted shares at the moment, maybe other assets in time to come.
So I'm assuming this is to add on to the revenue stream of the government. But you did mention that you want, the idea is to make it more fair, how the tax is being paid, it's to plug the loopholes, I think.
In a way, yes, because there's this, perhaps this element of, if capital gains are not imposed and there's a lot of money tied up in capital assets acquired by parties from funds obtained from various sources, this will probably not, it will go unreported. Right? And therefore, it is in a way to manage this, address these avoidance risks that are probably there.
Okay, thank you. Now let's move on to our second part of today's chat on personal tax filing. So we spoke about CGT earlier. Now, to the layman, most of us, all of us, are probably going to be affected by what's coming up soon. The basics first. Who needs to be registered as a taxpayer?
Sure. Well, we talk about personal tax. So any individual that has income of at least about 34,000 ringgit per year would be obligated to register as a taxpayer. So it's first and foremost, they will have to do this online registration. And so it's an obligation if that level of income is being earned by that particular individual.
I'm just curious, if it's less than that, does that mean you don't need to register, or does that mean you register and you submit, but you're just not subjected to the tax?
Well, it is basically an obligation of every individual that's earning income to register, perhaps.
Yeah.
You could say that. But because if you're not taxable at that level, at 34,000, with the personal allowances, reliefs, and certain rebates that are there, you may end up not being subject to tax.
Correct.
So the issue of loss of taxes, collection of taxes by the government, would probably not be an issue if you're earning, below that. So I wouldn't say that no, you don't have to, but this is looking at it, I think, from the practical approach, that if it's 34,000 at least, then you got to register.
Can you remind us again, when do we need to file this for the assessment year of 2023?
Okay, for individuals that are earning only employment income, they need to file by 30th of April.
30th of April.
But these days we're talking about online filing, so there's an extension given until the 15th of May. For businessmen, people that are earning maybe employment income and business income as well, or just business income, the deadline is 30th of June. And again, with online filing, it's extended till the middle of July.
Okay. Mr. Harvinder, can you just tell us what are the key changes in the tax rates or personal reliefs for individual taxpayers for the assessment year 2023? What do we need to bear in mind when we are looking at claiming these reliefs?
Okay. Well, I think for 2023, there's been a small reduction of the personal tax rate for the income band, chargeable income band of between 35,000 to 100,000. 35,001 ringgit till 100,000.
Okay.
There's a 2% reduction. So this would basically, cover the part of the B40 group and the M40 group.
Yeah.
So allows a little bit of more disposable income to go into their pockets. And at the same time, for the income band, chargeable income band of above 100,000 till 1 million, there is an increase of 0.5% to 2% to compensate somewhat for the reduction of 2% for the low income group. As far as personal reliefs are concerned, not much of change from the prior years, except that for this medical expenses incurred by the individual, for the spouse, for the child, for serious diseases. It has increased from 8,000 to 10,000.
Okay.
There is a tweaking of the EPF and insurance premium reliefs. It's a little bit complicated, but there is a slight reduction of that amount that we claimed. And in addition to the lifestyle relief of 2005, there's another additional 500 ringgit for the purchase of sports equipment. There's some other minor ones that
but
perhaps...
sports equipment was already there before, I think.
This is an additional.
An addition.
Additional.
So we're talking about, what, 3,000 when it comes to...
It's, it would effectively come up to about 3,000.
Okay.
Yeah. Okay.
All right.
And you asked this question about what do we need to be mindful of when claiming these reliefs. I remember at one time the IRB had shared with us the feedback that they've got cases where some of the individuals have claimed all the reliefs without knowing how it works, whether they are eligible to claim. So in order to avoid, obviously then you're going to get the IRB has to ask questions as to whether you have the documentation for that, so that dreaded letter from the tax authorities or the email will probably come by. So in order to claim, I think it's important, obviously, to ensure that if you're claiming personal allowances, fine, it's given. Child relief, you're eligible for that, the wife relief. Medical expenses have to be supported by the
receipts,
the documentation. So document is key. Documentation is key. It's not just about claiming. And we have, I think, the wish list of the professionals and the taxpayers to the authorities would be to streamline these incentives, these reliefs, make them a little easier to claim and understand, and not have so many reliefs, which the conditions for the claim itself are pretty complicated. So that would be very useful.
Okay. And keeping those receipts are very useful.
Oh, yes.
Very important.
Of course, very, very important. It's all about documentation.
All right. Thank you so much, Mr. Harvinder, for your time today and for giving us an insight and perspective on the CGT and the personal tax filing. Thank you so much.
Thank you. Thank you so much for having me here. And
thank you.
I appreciate it.
And that's it for On the Table tonight. It's now back to you.
All right, thank you, Mohana. And that wraps up Malaysia Tonight. I'm Shuhaida Arifin, and together with Mohana Priya, we'll see you again next time. From river to the sea, Palestine will be free. Thank you for watching.